I'm going to do just a quick market wrap here, and then I'll cover all of this stuff in a lot more detail in the weekend report. So a lot of things are moving in the direction and in the magnitude that I was expecting, but it seems like everything is just taking a lot longer than what I expected it to take. So I'm going to start with the dollar here. My expectation, I know everybody, when we were moving up, my expectation was that the dollar was would put in a top and then move down pretty significantly into a 3-year cycle low. Well, all the way up, everybody kept telling me I was wrong. The dollar was going to 110 or 120, but the dollar has topped and it's now moving down. It's stair-stepping down, and this has been talking about taking longer than I expected. This intermediate cycle is 52 weeks long now. This is insanely long for an intermediate cycle, but not unexpected, I guess, when you consider that we've been in a currency war for several years. So you have a lot of intervention and manipulation in the currency markets by central banks. But at this time, anyway, this is the 6th daily cycle within this longer intermediate cycle. It's finally broken the intermediate trend line. Let me draw that in here. You can see here it's finally fulfilled the requirement that an intermediate cycle low should break the intermediate trend line, and it's taken an awful long time to do it, but it's finally done it. And now we've got this 6th daily cycle has broken below this cycle low, which should indicate that we're still moving down into that intermediate, yearly, and probably 3-year cycle low here. So I'm going to take a guess and say that over the next 2 or 3 weeks we should get a bloodbath phase that that gives us a pretty scary decline in the dollar, and that will finish off the 3-year cycle low. I do not expect it to go below the 2016 low here in May. Even though this was a really stretched cycle, it was still a right translated cycle. So we're getting pretty deep into this daily cycle. So this should bottom here pretty soon. I wouldn't think it would take more than 2 weeks, but we might have a pretty scary drop in the next 2 weeks before this cycle bottoms. And you can see price is trying to drop below the 200-day moving average. So the market's doing what I would expect it to do, just taking a lot longer than I expected for it to happen. And we kind of got the same thing here in the energy market. Several weeks ago, before this bounce started, I was expecting this, which will be a yearly cycle low, to drop below the November low, because this intermediate cycle had been was and still is left translated. So that usually means price goes below the previous cycle low of the same degree. So this was an intermediate cycle low. We're working our way down into an intermediate cycle low now, which should also be the yearly cycle low. Since this intermediate cycle is left translated, my expectation is that price would move below the November low and maybe come down and test this major $40 area that has been support and resistance for like 40 years. So we've broken convincingly below this. So there was some question as to whether or not this was an intermediate cycle low. It kind of looked like it was there for a while, but I think that this bounce was probably just exacerbated by the missile strikes in Syria, which made this probably bounce a little harder, a little more powerful than it probably originally would have. I think without that we would have maybe just gone to $50, $51 and then rolled over and started down again. But again, it's doing what I expected it to do, but it's just taking a lot longer than I expected for it to happen. So, I'm back to my expectation that we'll probably get some kind of break below this November low before this yearly cycle bottoms. Moving on to the stock market, there is a chance that this was the intermediate cycle low, but everything else is really stretching the cycle, so I'm not going to rule out that we're going to get a stretch cycle here as well. You could call this a third daily cycle, and it has not made a higher high yet. So the potential is there that maybe after the French elections that we get a big scary drop similar to maybe what happened here in the Brexit that would give us an intermediate cycle low, maybe come down and test this consolidation zone here around 2250 and the 200-day moving average, something that I could clearly define, recognize as an intermediate cycle low. This was clearly an intermediate cycle low. This was clearly an intermediate cycle low. This is questionable. It doesn't really look like an intermediate cycle low to me. So I'm going to say maybe the French elections come Monday. We get so something happens to shock the market, and maybe we get some kind of a quick little semi-crash over 5 to 7 days, and that gives us something that we can identify as being a true intermediate cycle low. And I've noted this before. Usually an intermediate cycle low in the stock market will correspond with an intermediate cycle low in either the dollar or the euro. So if I'm correct and the dollar has one more quick little bloodbath phase down into its 3-year cycle low, well, then that could contribute to the selling pressure and give us a real correction in the stock market, something that wipes out the bullish sentiment. And then for gold, it's doing what I expected. We're in an intermediate decline. The intermediate trend line has been broken. We should have at least one failed daily cycle, and we don't have that yet, even though the miners have been hit pretty hard and silver's been hit pretty hard. So if I'm correct, and next week we get a correction in the stock market and a big whoosh down in the dollar, I would think that would be the trigger for gold to bounce out of a daily cycle low, suck all of the bulls back in, thinking that that was the bottom and that the correction in gold is over. And then, like I said, I would think the correction in stocks would be over pretty quickly. So that would be, once the stocks complete their intermediate and yearly cycle low and then start to rally again, then that would be the driver for gold to top without making a higher high here, and then continue this decline and producing a full yearly cycle low, probably sometime in June, maybe even mid to late June, depending on when we get our daily cycle bottom here. So everything is playing out pretty much as I expected. It's just taking a lot longer than I expected for it to happen. So the biggest opportunities coming next anyway, since gold should have another daily cycle before it forms that intermediate bottom, the big opportunity in gold is probably at least a month and a half, 2 months away. So that's not really a sector that I'm going to want to look at right now. The next really big opportunity is going to come in the energy market and maybe in the stock market if we do get that Brexit type crash after the French elections. But the big opportunity is going to be in one of those two markets or both. But I would say probably the biggest opportunity is going to be in oil, simply because I think the correction is going to be bigger. The rubber band is going to stretch further to the downside in oil than it has in the stock market, and especially the energy stocks. You can see here we're in like what is this, five-month correction. So sentiment is starting to get really pessimistic on the energy stocks, and so it's just the way markets work. The further you pull the pendulum to one side, the further it bounces to the other side. Classic example here at this bottom, when everybody thought oil was going back to $10 and that the energy sector was dead, never to recover again in our lifetimes, and we get the big rally. So rubber bands pulled really far in one direction, goes really far in the other direction. Same thing's happening. We've got a very long extended correction, and even though it's lasted a long time, it hasn't really dropped all that far, but I think the duration of this correction is going to generate a really nice rally in the energy stocks once we get our bottom. And it'll be the same as it is at every one of these intermediate bottoms, no matter what sector it comes in. I'm going to be bullish. Everybody else is going to be bearish. And that is your signal that it's time to start buying, when everybody else is bearish and I'm the lone voice in the dark calling for a trend reversal to the upside. So I think this is going to be your big potential here in the next couple weeks, let's say.